larger picture. So I could only say that it's been 27 years for me in this industry, and the last couple of years have been the most complex, most challenging, most chaotic one when it comes to international trade. And all along, I could say that the anxiety and the uncertainty of external situations, there's a massive churn in terms of policy making. Everybody's looking at the movement of secondary materials. It's a very protected business, and how best they can utilize this resource material for their own use. But besides that, for what's happening internationally within the country itself, there is a big churn in terms of policy. We've talked about EPRs, but the government seems to be in a high-speed lane when it comes to policy making for the secondary sector. So whether it is the ELVs, the EPRs, the green taxonomy, the green steel taxonomy, I think they want associations like MRAI to reach out to the industry and make sure that we all walk along together. One big achievement, I would say, is that while the government of India realizes the importance of such recycled resource material, I'm happy to state, as far as metals is concerned, except for the case of aluminium, I think we've done away with all custom duties. So I think let's give a big round of applause to MRAI for bringing the industry to this point, demonstrating the need for the country that scraps or recycled materials are for national interest. And I usually don't make predictions, but if met with the same logic, the same vision, I think it's only a matter of time that aluminium duty will be done with as well. So anyways, let's deep dive into today's agenda. I would have Mr. Aurobindo Gyan to come up on stage and take this forward. Just to give you a little brief on Aurobindo, he's the director of Blue Glance Consulting Private Limited, bringing over 19 years of expertise in financial markets, investment strategies, and risk management. He has held leadership roles across the Tata Asset Management Company, Kotak Securities, and Adani Enterprises, where he managed assets exceeding 3,000 crores and oversaw global commodity trading and hedging. A seasoned finance professional with an MBA and advanced training in strategic management, Mr. Gyan now advises corporates through his firm based in Hyderabad and an office in Mumbai. Aurobindo, stage is yours.
Thank you, Dhaval Shah. Good afternoon, everyone. I'm sure he has given an opening remarks. We're going to play a small video. Hi everyone. Look at the topic, current dynamics of non-ferrous recycling industry. So current dynamics is very, very important. I'm sure industry in the non-ferrous sector, starting from aluminum, copper, lead, zinc, nickel, we are seeing a lot of movements, a lot of activity, a lot of development taking place on various commodities. And I think it's a very right moment that we should address this point. And therefore, we have eminent speakers here and eminent guests also. I would like to call upon Mr. Sandeep Ramesh. Mr. Sandeep Ramesh? Yeah, please do come. He is the managing director of Nile Limited, and he has done his education from IBS, and he currently holds the positions at Nile Limited. Welcome, sir. I'd like to call Mr. Devendra Surana, sir. Devendra Surana, sir, please come. He is the managing director of Bhagyanagar Copper Limited, and he's a mechanical engineer, and we do keep chatting, and he is a postgraduate diploma in IIM Bangalore. He has been in the field of ferrous and non-ferrous industry for over 3 decades now, and he's also focusing on renewable energy side. I'd like to call Dhaval Shahji again. Dhaval Shahji, where are you? You missing? Yeah, please do come. Of course, we have been hearing him since a few hours now, and the Senior Vice President of MRAI, as also a partner of Medco Ventures LLP, and he's got 25 years of experience, and I personally like to listen to him whenever he speaks something on the dais, and he speaks so nice about the markets. Welcome, sir. And I would like to call Miss Tran T. Van. Welcome, ma'am. Please do come. And she's the founder and chairwoman of Prima Group here with over 20 years of experience. We had a call with her last week about understanding on the program, and she has given a lot of understanding about various things about Vietnam. And she's wheeled Prima Group into one of the Vietnam's leading enterprise specializing in ferrous and non-ferrous scrap, paper scrap, plastic scrap, and commodities. In March 2024, she co-founded Vietnam Metal Recycling Forum, that is VFRM, collaborative platform uniting local recycling companies. Yeah. I'd like to call Mr. Jain. He's not there? Yeah. No. He is Mr. Chi Hin Ling from Argus Media, and he's joined Argus in 2017 in London, and he's been in the industry for many years. And welcome, Mr. Chi. Jain. Okay, we are missing one of the speakers here, and Mr. Jain. And anyway, I'm sure we'll continue with the program. Dhaval Shah, you already have spoken a bit about the program, but if you still want to have a few minutes of opening remarks, will make sense, or I'll continue doing this.
I think let's do the commodities view.
Yeah. All right. I'm sure, as we spoke at the beginning, that this topic itself, the non-ferrous recycling industry, current dynamics, we have few presentations to make, and I'm going to make up my own presentations on copper, lead, and zinc, followed by Chi is going to talk about aluminium, and then Mr. Dhaval Shah will talk about other things in the market. Yeah? Can you make the presentation? Yeah. Can I have the presentation? Okay. So here the topic, as I mentioned, current dynamics of non-ferrous recycling industry. And here in this presentation for a few minutes, we're going to focus on copper, zinc, and lead. I'm sure some of the questions are going to be surrounding around these metals. So it is an ideal situation that we should speak a little bit about the commodities and then talk about that. Can we move on to the next slide, or do I have an option of moving this one? Here. Okay, so to begin with, we'll talk about copper. I'm sure many participants sitting here on copper industry, Mr. Devendra Surana sir has been into the industry of copper for many years. And we from Blue Glance have also been doing a bit of research on copper, and we have chosen to have this title for copper that is holding ground, facing friction. I'm sure the macro pressures, supply dynamics, demand concerns, there are many things which actually making the commodity copper being very, very volatile. Those who are tracking copper market, they are experiencing how copper has been performing, and therefore we have chosen this topic and headline for copper that it is holding ground. We are not seeing copper prices falling substantially lower. We are not seeing copper prices going much higher, but we are seeing a lot of volatility. And of course, very of late, we have been talking about tariff-related development. Very quickly, the tariff-related developments keeps on changing, and that's how we have seen. Of late, on 1st of August, Mr. Trump has built into a tariff structure, and something has surprised to the whole world that the primary raw material input material has not going to be part of the tariff structure, and that's completely changed the entire scenario for copper. Let's look at few slides on copper now. You see this is copper price performance. Of course, we have the data of CME copper, we have the data of LME 3-month forward, LME cash, and Shanghai copper. You see the price performance. The latest data, if you see a sudden drop in the prices, which is known to the whole world, and copper prices have dropped substantially. The blue line that if you look at it is the CME copper, and I'm sure those who are tracking copper and tariff-related development, They all understand why copper prices in CME has dropped so significantly in a single trading sessions. And some of the data that I would like to explain here is that this data is as of 1st August 2025. 5 days before 2025 August, the CME copper that is largely traded was seeing a return of 40%, and today, as of 1st August, the return has been completely eroded, and now it is just mere 7%. And look at the LME performance data. It used to be 13%, now it is 9%. And so as Shanghai number. This is quite interesting here. All that we saw in last couple of months, CME copper prices standing at the top against all other exchanges copper prices, has come into the normalizations now. We talk about mean reversion, we talk about readjustment price, and we talk about various other factors. I'm sure the tariff has played the major reason why copper prices have declined of late. Two more data that I would like to talk here is that look at the 5 years average CAGR return of copper. It's typically 5%. You look from the perspective of primary producers or the secondary producers. If your CAGR return or the EBITDA is 6 to 8%, that makes sense. The copper 5-year average return is just 5%, and 10 years average return is less than 8%. And this year, CME copper we had seen going up to 30 to 40%. So that is non-sustainable, and therefore we had to see some action happening in the market, and therefore we have seen the mean reversion taking place, and copper is now currently doing this way. I'll take you another few more slides here. You see this. Those who track copper in detail, we look at the CME and LME copper spreads. Look at how it has gone. 10 days ago, we had seen CME to LME copper used to be $3,000 per ton metric ton spread, and today it has come to almost zero. This morning, I was looking at the spread. It is just hovering around $30 to $40. Look at the kind of action. I have seen a lot of market participants in the industry. They do manage their risk management book by using CME, London Metal Exchange, and other exchanges, and in fact in India, MCX as well. So this spread has actually spoiled a lot of dynamics in the copper market. What we have seen, the inventories have flown back from rest of the world to the US, and the media news states as around 0.5 million tons. Now the tariff structure has changed so significantly that input material will be exempted from tariff. So should we think that the material which has moved into the US, are they going to come back to the rest of the world? If that is going to happen, then what will happen to copper market? Look at the last 1 to 1.5 months movement of inventory of copper in CME and London. It has started to come back to LME. If that happens, then probably the consequences are going to be very, very different. So we have a thought here that those who track this spread, how the spread is looking like in 1 to 2 months from here. And also we have stated how 3 to 6 months the spread could be. Of course, the key risk factor is that, which we have been hearing almost every day, renewed tariff calls could continue to be a challenge. This remains a challenge. Those who are into copper industry and doing their business, they have no choice than follow the macro development, understand the supply dynamics of copper, understand the demand dynamics of copper, and most importantly, how the stock movements happening across the exchanges. I'll take one more slide here. Look at the inventory trend performance. I'm sure it is self-explanatory. You see the LME copper inventory numbers, they have declined sharply. Look at from the numbers on the left side. It is 1 year data as of 2025 July. How LME numbers have declined, how COMEX numbers have declined, and you see how Shanghai copper has played steadily, though it is trading at a bottom. But if you refresh the data as of today, we have started seeing inflow into the LME now. Can I say that the CME copper stocks, which is being held by Americans, are they going to come back to the rest of the world? If that happens, should LME copper prices, which is holding around $9,700, can continue to hold, or is it going to come down, or it is going to rise? Lot of questions here, you know. So some of the statistics that I have mentioned here, how LME stocks have depleted over 50% and how CME stocks have performed. So at the start of 2025, look at this number, LME stocks were higher by 178,000 metric ton from CME, and today it is the other way around. So if I have to say that new normal mean reversion has to happen, then things might change going forward. Few more slides on copper. One more important factor which I'm going to post questions to some of the DIAS members sitting here on copper. One important development that we have been hearing about the data center demand, which is emerging. You know, look at some of the data which we have figured out from secondary sources. Current intensity, look at data center uses about 27 to 30 tons, say about 30 tons of copper per megawatt of applied power. And we have seen and we have been projecting how the data center demand is going to come in. So there are forecasts being made for 2030 and 2050. It's going to take away a larger portion of copper consumption's demand from the total consumptions. So if you look at the number, we are projecting a number of 2 million tons. So let's say about 23 to 25 million tons of copper production globally today. If 2 million tons goes towards data center demand, just imagine how the dynamics is going to change. We intentionally kept this slide here on the copper session is because we wanted to highlight the emerging demand is a new factor that is coming in from the data center side. And however, some of the traders also must be sitting here and the hedgers must be sitting here and, you know, manufacturers or consumers of copper. And we wanted to say what could happen in rest of 2025 in copper and what could happen going forward, that's 2026. So we have our own views here. Rest of 2025, we talk about key changes ahead. Tariff is a major call that is to be continued to look at. We talk about Chinese demand. I'm sure some of the Chinese participants must be sitting here and they would know better. So we talk about weak constructions, strong grid demand. We talk about scrap shortfall, which is going on, a major discussion currently on copper. And of course, supply side, there are delays in mines, you know. And we talk about macro risk. We cannot go away or stay away by looking at the macro risk factor on rates, dollars, geopolitical drives. This rest of 2025, which is another 5 months from here, copper is going to experience with these factors. And that determines that copper is going to experience a lot of volatility. But on the larger scale, if you look at in 2026 and ahead, we are talking about energy demands. We just gave you a perspective about data center. We talked about energy demand. We are talking about supply deficit, which is already there. We are talking about investment demand. If I have to earn 8% CAGR return, then I could also look at investing into various ETFs of copper as part of investment avenue and regional shift tariff. So if you look at the structural strength of 2026 and all, maybe 6 months down the line from here, we will see, organic growth in terms of demand from copper coming in globally. We have a small slide here on the in-house model projections, which we do on copper, and currently copper stands around $9,600. And we make our own call on copper and various other commodities, and we look at copper prices being around $11,000 to $11,500. Some of the participants here or delegates or speakers might accept to this view or might not accept to this view, but that's the view that we have built here. Yeah? Okay. So that's one thing about copper I wanted to quickly touch upon. I have been given the role to speak a little bit about copper, zinc, and lead. So few more slides to talk on zinc. And, what we spoke about copper is this tightness in the market, okay? In zinc, we are talking about supply recovery or different dynamics from copper. If you have to talk about lead, the market is completely steady. Many lead players must be here. I'll just run few slides here. The title that we have chosen is that supply recovery, demand resilience, and market stress. So what we want to talk about zinc here. Here is a balance sheet of zinc, data from 23, 24, 25, and 26. I would like to give the courtesy to the Bloomberg data and Citibank research also. It is well accepted numbers. You look at 25 and 26, we are talking about total mine production numbers to grow. And at the end, the year for zinc 2025 and 26, we are talking about surplus. Surplus about 124,000 tons, 110,000 tons. If these kind of numbers are there, zinc, what we have seen a recent surge in the prices probably might not even hold. So take a look at this. This is the COT report. Those who track zinc in detail, they look at how the investment trend of zinc has been. The long positions, the short positions, and the net positions. The latest data, if you see for the last 2 to 3 months, there is a surge in zinc prices, and there's a net long. But look at the fundamentals of zinc, then I'm sure this net long that is being currently held probably may not sustain. And the call that we want to make here on zinc is that we have three probability metrics made. One is base case, bear case, and bull case. If you look at the base case, which is our call here on zinc, we talk about zinc for rest of 2025, which is currently trading higher, might not even sustain those gains, and probably we might see a bit of fall in the prices. And the drivers that we are talking about, the slow growth, rising supply, and downside price that is likely to happen. Similarly, we have also proposed our 2026 price outlook on zinc. So very most likely the base case scenario that one has to look at is the view that is coming out on zinc. I'll quickly take, I'm running short of time, I'll take a few more seconds. Lead, I think personally I have felt lead is one of the best commodities to deal with, trade with, because the most resilient one, indispensable, and steady market. Unlike copper, which is volatile, unlike zinc, which is volatile, and so as aluminum. So lead has been historically a very steady commodity, and we need to quickly understand why is it so. We have a balance sheet on lead. It is clearly stating that it is also going to be a surplus number this year. We say that safest metal to play in the range, while structural gains are unlikely. I'm sure many lead players will talk about lithium ion, other industry-related, other alternatives to lead. So by and large, if you look at it, lead has been very steady in terms of its pattern, and we expect the surplus to continue to be there, and that's the view coming in. Yeah. Similar lines, we have also looked at the concentrate price performance. We have looked at the low-grade lead performance and how the scenario is looking at this moment. So just to conclude my presentation here, those who track lead, we have a view that lead continues to be in the range bound. Currently, price has been trading at $1,960 for 3 months forward, and we continue to hold this range for rest of 2025. It's safest bet to look at it. And if at all price has to go up to $2,100, then we have to have some reasons behind that. And so as the bear case scenario, we talk about $1,850, then we'll talk about cost curve coming into the picture. So that's the view coming onto the lead. This presentation can be shared, I'm sure. So that's the presentations we wanted to make. Yeah. Thank you. Thank you. Being a moderator, I've done my presentations, and I'd like to call Mr. Chi. He's going to speak a bit on aluminum side, and please, Chi, please welcome.
So thank you very much. Get the slides. There we go. So I'm going to talk about aluminium today. As we heard earlier, that aluminium is one of the more volatile one. So I'm going to focus a little bit more on the short term thing, and I don't have too much on the forecast side or the outlook side, because I think every one of you have probably read a lot of reports as well and probably agree that the future for aluminium is pretty good because of all the energy transition and so on as well. So I don't think I have to spend too much time convincing you that there's a future for aluminium. So a quick one, if you don't know us, I work for Argus. We are the price reporting agency. So we look at commodities and metals is one of them. We actually look at a very wide portfolio of commodities, including oil and stuff like that as well, and metals is one of them. So I'm not going to spend too much time talking about a company, so let's get straight to the point. Tariff, probably the word that we have heard many, many times this year or the past 6 months or so. It's quite interesting to see that we saw the big drop, obviously, when Trump announced the Liberation Day in April. And then we have actually made up, or the prices have actually come back since then. And that's pretty much because of the market reacting very positively to the series of trade deals that we're between the US and some of its major trading partners. And if you look at that, we are not actually too far away from the highest point of this year. And we do believe that it's probably going to be moving higher, further higher, than exceeding the sort of like 2,700 points that we saw earlier in the year, as more and more trade deals being announced, and so on. However, the interesting thing that we should hear or we should note is that despite the fact that we have now, the tariff only really lasted for maybe a month, 2 months, 3 months or so, but actually quite a lot of companies, particularly larger miners and so on, have actually reported that damages have already been done. So for example, Rio Tinto have reported over 300 million tariff-related costs just in the past 6 months, or just in the first half of 2025. And of course, Alcoa reported 115 million tons of tariff-related costs just in the second quarter alone. Of course, a lot of these costs are associated with their operations probably in Canada, but we do see that outside of Canada or Mexico, which are sort of what been hit the most by the US tariff, damages are done, for the Australian miners and the European smelters, and of course probably Indian smelters and so on as well already. So we saw that the LME prices have recovered already, and it's quite interesting to see that, unlike copper, there isn't actually much of an arbitrage. Or the LME and the CME market actually are moving quite in sync. Even though I think earlier the year when Liberation Day was announced, there was a little of an arbitrage, but then it was quickly closed. That was quickly closed, so the paper market are already in sync again. But the interesting thing is, if you look at the physical delivery market, the physical market, you actually see that the premiums, they are not in sync at all. If you are in the US, then I'm sorry, I have to say that you are paying 7 times more in terms of premium compared to your competitors outside of the US. And that's mostly thanks to Mr. Trump tariff. So we're seeing now the tariff of P1020 in the US is north of $1,400 per ton. While you see it in this part of the world or in Asia, for example, in Japan, which was, I think, the quarterly premiums closed at about $100 or so. And I think the spot trade was low at sort of $60, $80 in the past couple of weeks. And of course, if you look at Europe as well, it's a pretty similar story. We're looking at sort of a $200 per ton or so. So if you're in the US, if you're taking physical delivery of material in the US, you are paying on top $1,400 per ton in terms of premium, which is pretty much half of the price, of the LME or the COMEX price. And that potentially, let me remind you that Mr. Trump put down the tariff at 50%. And so that's largely is because of the tariff itself. So we're at MRAI, so let's look at the prices for the scrap now. If you look at the processed and unprocessed aluminium scrap, there's showing a slightly different story. I think on the tin and tablet side, that you can see that in Europe, prices are rising. Our European colleagues, or my European colleagues, are reporting that there are lots of European smelters and calling that there's a very much tight supply in Europe, and they're recently again calling for the EU to limit the exports of aluminium scrap because they cannot get hold onto them. But if you look at things in Asia, it's a lot more stable. I think in Asia, if you look at the past few months, the premium or the prices for the scrap has actually been quite a bit range bound between sort of like 19 to 20 in that range, unlike Europe. So I think what will happen is you probably will start seeing less European material available to this side of the world because of the higher prices in Europe and because of the tight supply in Europe. And let's remember that I think potentially the Europe or the EU is going to start limiting exports of scrap, not only just aluminium scrap, but also on ferrous scrap and copper scrap and so on as well, which of course India and this part of the world is a large importer of these scrap. If you look at the right-hand side one, if you look at the process one, the absorber, prices are actually quite interesting. Prices are actually under pressure in the US. And that's I believe is because of the weak demand in the US, and of course there are also a lot of exports that they want to export the material to Asia as well. But then the Asian demand hasn't been great in the past 6 months or so, so it's putting pressure on that as well. So that's roughly my presentation. I don't want to take up too much of your time because we've got a very esteemed panel here that we can talk a lot about things. So I'm just hoping that I can set the tone for today on the aluminium side. So that's all from me for today. If you've got any information that you want from data that we saw early in the slides, please do contact me or my colleagues. So thank you very much.
Thank you, Chi. I'm sure we discussed about copper, zinc, lead, and aluminum, and no respect to aluminum as well. We have seen a lot of movement across metals, and we are experiencing a lot of activity in metals, and that's why the topic was chosen as current dynamics. We have a slightly different topic to discuss, and I'd like to call Mr. Dhaval Shah. He's going to talk something on preserving international trade flows of recycled materials. I think this is also one of the very important topics to discuss on. So he's going to talk about that thing in the industry. Thank you.
I think the last 30-40 minutes, we've seen some lovely projections, graphs on what copper looks like in terms of pricings, in terms of demand. Same with zinc, lead, and aluminium as well. It reminds me of this movie, Jerry Maguire, because most of our people here, they are into secondary play. So in Jerry Maguire, there's this famous dialogue which says, "Show me the money." I think if I use that in this room, it would be "show me the scrap." Anyways, I'll get on with my presentation, which of course is going to talk about the global trade of recycled materials. Now, I've said this in my opening remarks that international trade has become extremely complex and challenging, and it is happening at a time when India is making some substantial progress in its economy. I believe that recycling and production of secondary materials or metals is a shining example of how socio-economic environmental transformation takes place. And there's a big challenge here. So while we want to do all of the good work, the big challenge which you have, which I have, which everybody in this room has, is do we have adequate raw materials? I think over the last few years, recycled raw materials or scrap has become a rare treasure, and country after country is trying to use that to resurrect their own economies and push them ahead in the sustainability and the decarbonization race. I think it's the new era Game of Thrones. Anyways, before I go forward, let's talk about India and how we stack up in terms of secondary metal production and how we manage our scrap flows. So let's start with the biggest of all, that is aluminium. The secondary aluminium output in India is about 1.83 million tons, which represents 31% of the total aluminium production if you stack up primary and secondary together. And to produce this 1.83 million tons, we have a sourcing of approx 300,000 tons from the domestic market, which represents about 15% of the total appetite, and the remaining 1.73 million tons is met through imports, which is about 85%. In case of copper, secondary copper, which includes copper alloys as well, the production is about 350,000 tons, of which 27% of the raw materials are met through imports, the balance from domestic. In lead, we produce about close to 700,000 tons, and we find that imports contribute for raw materials to about 10% of those total needs. In zinc, it's exactly the opposite of lead, where 90% of raw materials come through imports, and we produce about close to 91,000 tons of refined material. So as you can see that we are largely an import-centric economy when it comes to our needs for recycled raw materials and production of secondary metals. Now this is very interesting. Now we all know that the implementation of the amended waste shipment regulation by Europe is going to be a game changer, and it's going to transform supplies across to the non-OECD countries, particularly in India. But we'll talk about that later. At this point, I want to show you this slide, which shows how precarious the situation is when it comes to the global trade of metal scraps and how much resistance it's facing in form of tariff and non-tariff barriers. So the previous slide, the summary of this is that since the volume of ferrous scrap is multifold of non-ferrous scrap, usually restrictions trigger in. They start with ferrous scraps, and in most cases they are applied to other non-ferrous scraps as well. If I break this down, there are about 48 countries that have put restrictions on exports of ferrous scraps, and with 38% of that exercising a total ban on exports. Now, once the waste shipment regulation is implemented in the year 2027, in the summer of 2027, what it would imply is that every third country in this world would have some sort of barriers on exports of recycled materials. I would like to remind you that the amended waste shipment regulation is no more a discussion. It has been formally adopted into law. In May 2024, it got adopted by the European Parliament, and the implementation of that starts in 2027. Now, if you break down this into a continent-wise understanding that what kind of restrictions you have Africa leading with about 55% of those total restrictions, followed by Asia, Middle East, South America. The EU's percentage will substantially change. It will perhaps get onto the top of the list once the implementation is done in May 2027 of the WSR. Now, you may want to know what kind of restrictions and barriers there are. That's why what you can see on your screens, that the countries have either used licensing, duties, total bans as most active form of putting trade restrictions. Now, over the last 10-12 months, India is finding itself in a very tough situation when it comes to projecting continuity of scraps flows from the European Union. It is our belief that the European Union is contributing close to around 22-23% of the total scrap imports by India. So once these regulations come in, it has created some sort of an anxiety in terms of how it will impact our secondary industry. I was participating in a conference which was held by the EU, the officials of EU, and one of the things, the tenet or the basic template that was set out is that while these amended waste shipment regulations are done with an intention that Europe does not want to export its waste challenge to third countries and wants to adopt environmentally sound management of waste, there is something more to this. Now, if you look at this graph, what it tells you is that if EU exported around 35 million tons of so-called waste in 2023, they imported similar tonnages, perhaps a little more, in 2023, in different categories, I would say, but everything under the banner of waste, but they imported more than what they exported. Now, if you look at the title, what they have used on those charts, it's from Eurostat, which is a government agency of European Union. These slides have been titled as Intra-EU's Trade in Recyclable Raw Materials. They have clearly refrained from using the word waste, which otherwise creates a prejudice in people's mind, and then you make policies to sort of, support or defend that trade. But I guess that ship has sailed, so we are waiting for European Union to spell out exactly what will entail in terms of every process, every compliance that has been put in the draft document. There's reporting, periodical reporting, there are audit processes, there is an exchange that will come up, an European exchange where registrations have to be done, but we'll see what happens there. Now, here, this slide tells you that starting 23rd July this year, that's about roughly 2 weeks ago, the European Commission has activated customs surveillance system to monitor the import and export of metal scrap into EU and out of EU, covering steel, aluminium, and copper. Now, the purpose of amending the waste shipment regulation was to control, not to transfer the challenges of EU waste exports to other countries. The EU has also simultaneously adopted one plan, which is a very important critical development into this whole discussion. On 19th of March, they have adopted a document which is called the Steel and Metal Action Plan, the SMAP, which basically states that the EU is experiencing a decline in metal scrap availability for recycling, and there is scrap leakages happening to third countries. To ensure that there is sufficient access to the EU's metal industry, the Commission will closely monitor imports and exports of metal scraps. Now, this could also entail putting export duties, potential export duties on metal scrap exports from the EU. The question here is that really, is it about emissions and environment and the sub-capabilities of the non-OECD countries in treating the European scrap, or it is EU's own need to protect the interest of its domestic industry? And we'll see how that evolves, but I guess EU is also looking at really resurrecting their industry by keeping the scrap within. From European Union, let's go to United States. Now, if you see these headlines from Fast Markets, which was reported on 15th of July, which one of the key collector and processors of non-ferrous scrap in US has quoted, "We're calling for smart, balanced export controls that include export licensing, improved data transparency, and prioritization of domestic supply." It's not a ban, but they want controls. Now, this has been supported by Copper Development Association. So all I'm trying to get at is that we don't know what the future holds, but once again, it's only going to get complicated and strained as far as future supplies to Asian countries go from the Western countries. Conclusions: the number of trade restrictions for scrap exports will increase over a period of time. Countries will develop new types of scrap export restrictions aligned perhaps with climate policies. Now, volumes of global scrap trade will decrease as this material will be used more domestically. Scrap will no more be a commonly export commodity. Third, scrap consumption in the EU will grow because of decarbonization trend and CBAM. I think same with US as well, with all the new investments that is getting into the secondary space, into copper and aluminium, you might see a big surge in scrap consumption there. While other countries will also parallelly grow in terms of scrap consumption, scrap industry will significantly rely on domestic generations, local collections, and availability. For the longest time, we've seen this where, the tagline says, diamonds are forever. I think it's time to say recycled materials are forever, because that's going to be an absolute shortage. So whatever business activity that you're doing, just try to foresee this, that it will get more and more restrictive as far as global scrap flows are concerned. So you might want to increase your local dependency. And I think, that is the need of the hour for every country, for every industry. With that, I'm going to end here. Thank you so much. Good luck.
Thank you, Dhavalji. Thank you. So we just talked about the current dynamics, and we have the eminent panelists sitting here, and we're going to run a moderating the event. I'm going to have an opportunity to question some of the key points to experts. I'm also going to sit with them and. Yeah, hi. So I'm sure 5 panelists are sitting, and topic moderation is all about tariff barrier and quality certification and global competitiveness. We have Mr. Suranaji. He's going to talk about copper. He's the expert. Mr. Rameshji on the lead. Dhavalji, we just spoke about it. Tran, I'm sure she is here. We are on her land in Vietnam. She's going to talk about Vietnam's markets. And he just spoke about aluminium. So we're going to do one thing. We're going to post few questions to each one of them, but then we're going to break it down to 2 parts. One is commodity-wise questions. Maybe I'm going to ask questions on copper, aluminium, and lead. And I'm going to ask them on the Vietnam markets, and I'm going to ask Dhavalji about how he's been looking at the industry, recycling, export side. He talked about on European side of the markets, and that's how we're going to question that. Are we all ready to take questions from you? So since we are sitting on Vietnam, and I would like to question Tran, the first question. I think the lady should be given the opportunity to speak first. Welcome, ma'am. So I have a few questions to ask you. The first question, and we talk about, when we think about Vietnam, we talk about transshipment, yeah? So transshipment hub. So recently, we have been hearing a lot about the tariff side. What is your government doing about the transshipment hub, which is very important place, Vietnam, geographically, if you look at it, very important. So my question to you is that, are there government-driven targets to reduce import dependency in refined metals? Especially I'm talking about bauxite to alumina and then copper smelting. What is your view on that?
Thank you. First of all, may I have my gratitude. First of all, MRAI, that the president and the team already accept my invitation to Vietnam. That is also, I also want to show my gratitude to the support team. Again, I also say very high appreciation for my VMRF, the very junior forum that we established in Vietnam for collecting, gather everybody as a recycler, especially metal, including recycler, factory, and trader, that one. So about your question, thanks for your question. Yes, absolutely. Our government recognize very clear about that. Not now. It's happened in 2018 when Vietnam, from 2016 to 2018, Vietnam export primarily steel, coal to US. And that time, some company already, how to say, that means they checking for the transshipment from China to Vietnam. So your question now again, yes, Vietnamese government very clear on this. And they are very cooperate with US, cooperate with the team, how to make the regulation, first of all, about checking the origins on the certificate of origin. It must be it will be improved to be 4 digits of HS code. That means not only raw material and just the OEM here and then export, not allow that.
Okay.
So government have a strictly regulation and to follow the FTA and WTO very strict. So I can see checking a lot, have some new restriction, and this is the time they have a campaign for that. Because we need to show with the world, especially with the Trump government, we are in negotiation and very active to get the reduced tariff. Yeah.
Thank you, Tran. Thank you, Tran. I'm sure she has been very particular about what she has to say about it and her government. And thank you for being very clear about that. So one question was related to the Vietnam and the development in the country. I want to move to a commodity question. I'll ask Mr. Devendra Surana sir on copper. So one quick question to you is that while making my presentation also, I gave a presentation, one slide about the demand side perspective. That was one of the avenues, that is data center. My question to you very specifically is that, say something about the demand, how it is looking for next couple of years from here. And if the demand is going to grow, are they going to be sustaining in the long run or not?
Thank you very much for that question. So, what are the three buzzwords today in the world? The three buzzwords today are AI, green energy, and EVs. So, green energy and EVs have been here for a few years. Let me just first talk about EVs. Every EV requires roughly 3 times more copper than a regular IC engine vehicle. So as the growth of EV happens, the use of copper will triple. Second, green energy. Green energy requires roughly about 3.5 times more copper for every megawatt added compared to our traditional power. So that means for every megawatt of power added in green energy will require 3.5 times more copper. And the latest one, AI. Aurobindo has mentioned in his presentation that we will reach roughly about 10 to 12% of the total production of copper will be used just for AI. From right now, it's almost negligible all over the world, but in US, it's about 2% of the copper consumption. It'll go to 10%. Put together, these three things will really increase the growth of copper consumption throughout the world. Right now, the copper consumption is under control because the real estate sector in China is on a slowdown. But once that picks up also, there'll be a huge demand of copper. On the other side, what is happening about the production? The production is not really going up so much, especially the primary production. All of us know that primary copper is costed as TCRC, that is the treatment charges and the refining charges. From being positive $100, it has gone to negative. That means absolutely no concentrate is available in the world. What is left is copper scrap. And fortunately for us, the utilization of copper scrap, better utilization of copper scrap is happening all over the world. And while we continue to see reduction of availability of primary copper, I think this shortage has to be met by recycled copper. And that's why I think this sector is really going to grow by leaps and bounds. Luckily for us, the copper intensity in reuse is the highest amongst all metals. We use roughly about 94 to 96% of copper is totally recyclable. So from that point of view, I am really bullish on this sector.
Thank you. So basically, just to comprehend, he talks about the new demand from AI data centers to rise by 8 to 10% of the total consumption. And despite that, if the demand is still not sufficient, then we have to have a high dependency on the recycled copper. As he spoke about the percentage, 94, 95% are recyclable. So I think recycling industry also plays a very important role as the demand grows for copper. Thank you, sir. Thank you. I'm going to ask you a question to Sandeep sir on lead. He has been in the lead industry for many years. And personally, I also gave a few slides to talk about on lead also. And I have seen that lead has been very range bound. And typically, I also mentioned that lead is a very steady commodity. My question to you is that, we are highly dependent on the recycled lead, recycled lead, and primary lead production numbers continues to be very slow and steady and less also. So if I could recollect my balance sheet, the recycled lead production is higher than the primary one. So my question to you, which I have drafted, I'm going to read it to you for your betterment. Is the global lead supply chain becoming increasingly dependent on recycled resources over primary mining? What are the implications long-term pricing industry?
So yes, recycled lead continues to grow, as you said. I think probably over 70% of the lead being used worldwide is now coming from recycling as opposed to primary. And probably, one of the main reasons for this is lead is inherently recyclable by its nature. And the primary application for which lead is being used is for batteries. Over 70% of the lead is used in batteries, which by themselves are probably the most recyclable commodity in the world, with an over 99% recycling rate. So that lends itself to recyclability. As to why, secondary over primary, I'd say a couple of reasons for that. Firstly, primary for any metal takes a long time. The gestation period is long with all the environmental permits and, displacement of local population, environmental regulations, etc. So that makes it easier to go for secondary. Secondary also has the added benefit of, it's more energy efficient, less water consumption, etc. And thirdly, I would say, wherever, in almost every country across the world, you have lead smelters now. More than one lead smelter in most countries, including South America, Africa, etc. So those places already have a collection network to collect the scrap and, processing place centers to process the lead and to send the lead back to primary use. So that closed loop of circularity exists, which is why I think you will see secondary continuing to play a bigger role going forward.
Thank you. It was very prominent that we are highly dependent on the secondary side. I still wanted to hear from him, being in the industry for so many years, and it is evident that the secondary side of the industry is highly reliant, if at all we are expected to meet the demand. Of course, long-term greenfield projects, primary productions are going to take their own sweet time, but then recycle industry plays a very important role for this. Thank you, sir. Thank you, sir. I want to come to Mr. Chi to ask a question on aluminum. After that, probably I'll go to Double G on asking something else. You spoke about aluminum at length, and I have a question to you on aluminum. Is global aluminum supply, especially supply, structurally constrained due to energy-intensive smelting? I want to break my question here, the first part of it. Are you constrained with energy-intensive smelting? Basically, my question is that the energy cost is playing an important role for you for supply side of improvement into the aluminum industry? Or is the market entering a phase of overcapacity led by Chinese expansions?
Thank you. It's a difficult question, and I think that is quite interesting. It's a bit of both. It's a bit of both. We're looking at probably globally. It's probably a market that is a very tight market, and things are, people are not getting enough aluminium. But then if you look at things in China, that's a different story. There are lots of supply in China, and part of the reason is because the Chinese smelters have the benefit of using the hydropower, so they don't have the same, they don't face the same challenges of the high energy costs and so on as the outside of the world. So that's how I see it. The market is, yes, it's a structural overcapacity or a structural oversupply in China. But then outside of China, there are probably still a lot of demand, and we're probably not seeing enough supply outside of China. And the question is, will the Chinese material be filling the gap that we can't get from, say, maybe from Europe or the US or so on? That's a difficult part, because we have seen many times before that, when China starts exporting more and more material, there are more and more tariffs. So I think that's a really difficult question, and I think for the short term, we can probably be expecting that China's to churn out more semi-products on aluminium, but then while the finished products are probably going to be facing more tariff.
Thank you, Ji. I'm sure whoever is being asked a question, it is by default that you have to talk about the short term, because that is how the market has been. And then to build a view on the long term, it requires a lot of efforts to thought through. I want to ask a question to Mr. Dhaval Shah, a very straight question to you. You spoke in detail about the tariff barriers. What trade barriers are limiting global scrap flows, and how do they impact India? Say something more about Indian perspective.
Well, as I said in my presentation that, you see, because we started off with a low consumption base, the domestic generations are inadequate. And essentially over the last 20, 30 years, we've evolved our dependency on foreign recycled raw materials is quite a bit. So obviously, when all of these changes happen in terms of policy, and I think in the last 7, 8 years, the world has kind of woken up to this fact that recycled materials are precious, and it's an effective tool in terms of attaining two things. One, of course, is the competitiveness, or they are very valuable resource materials, and two is the fact that today, when the world is talking at different levels in terms of the decarbonization goals and emissions, I think it's a very potent tool to ensure that your scraps are kept within. Now, from an Indian perspective, I think both industries and government alike, I think, are getting into an overdrive now to say that while all this expansion is taking place, all these new age applications that you're looking at, but how can we make sure that these applications, these investments, these industries don't find it too challenging when it comes to raw materials? So I think there are a lot of policies that are being announced. As you can see in our plenary session, there are about 11 or 12 concept documents where MRI has participated with the government. I think basically to look at how we can enhance the availability of domestic materials. But again, I think the reality of the situation is that we cannot overnight turn into we can rely on domestic scrap. I think imports will have to be the answer for now, but making sure that no policy that India has is taking into account that we should stop. I mean, even the duty on aluminium scrap, why do we have that? I think let's accept that it's an important resource material and we should do away with duty. So while we are working on different ideas, the end-of-life vehicle policy, the EPRs, the green steel taxonomy, I think by end of the day, if really those targets need to be achieved, I think India will have to work on a two-pronged strategy. A, improve domestic availability, collections, treatment, efficiency. And B is that if there is scrap available around the world, let it come in case if it helps your economy. And I think it very solidly helps our economy. So I think that's the approach for now. I think, as I said, that I still see that, all these regulations will kind of impact supply flows. I think it's a big question in US as well. In aluminium, they're putting up a capacity of over 1 million tons on secondary space. So obviously, they'll also need scrap. And likewise, I mentioned to you about Europe as well. So the world is going to scramble. They are going to go all out to achieve as much as they can on the scrap. And I think India, if an opportunity is available, not to lose it. Just grab every ounce of scrap that is available, good scrap that is available.
Thank you. Thank you. I'm sure everyone is facing this challenge, and currently we are also having the similar thing going on. Thank you, Dhavalji. I want to come back to Ms. Tran again. We have a few questions for each of us. You spoke about government supportive in terms of development. You spoke about transshipment hub. I have another question to you. In terms of Vietnam's infrastructure and renewable energy side, what are the ambitions translating into robust long-term demand, especially for the base metal side, non-ferrous metal side?
Sorry, can you repeat me?
I'm going to read this. Are Vietnam's infrastructure and renewable energy ambitions translating into robust long-term demand for base metals?
Thank you very much. Before I answer about your question, there is a that means missing information for the first question that you asked me, but I see the tariff, the shipment is the hottest. So that's why I forgot to tell you. I just want to again answer you about your first question. Vietnam government recognized from long time for making to improve the primarily, that means the refined aluminum by have a big project for the bauxite in the local. And from the bauxite till now, they export mainly is the alumina. But targeting 2030, the government already have a plan and targeting to get the renewable for energy there and the technology to save the about the energy. Then it will be the primarily smelting scrap from alumina. Yeah, that is the first one. For the second one question, because the voice is a little bit not clearly, so may I ask you again the point of the second question?
Oh, sure. Yeah. Yeah, I'm sure a bit of language barrier coming here, but then I'll repeat my question to you again. My question was about on transshipment hub. Let me read this to you. Let me read this to you and clear this out to you. How does Vietnam manage the risk of being used as a transshipment hub for tariff avoidance? Especially, I'm talking about the question on copper and aluminum that you deal with amid rising global trade issues.
Yes, thank you.
I'm sure you gave that
Sorry to ask you again. Yeah. Yes, absolutely. Vietnam, you can see nowadays many restrictions for the import from Malaysia, Thailand, and China strongly. So you can see the demand from Vietnam is increased. And the Vietnam government before, they released mostly the import license for aluminum mainly. But coming now, license for import copper scrap. The many copper scrap remelting already get. One information that a Vietnamese trader, if normally we don't have the license, only the factory who have standard technology, and that is a standard technology can do the import license. For the hub of recycling, yes, we trust on that because you can see the demand of import for the aluminum scrap is coming up. And we targeting to become the leader of in terms of technology and capacity on aluminum, especially on aluminum. For the zinc, we don't have no import license for the zinc, but the primary zinc import for steel galvanizing and steel hot dip galvanized is very good demand. Aluminum primarily also increase a lot because we have around 500 industrial zones already licensed, and most of them is FDI investment. So the demand we can see recently increased a lot. Yes.
Thank you. Thank you. We got it clarified now with the questions 1, 2, 3. I'll come to Mr. Suranan sir on copper. One more questions to you. Very straight questions. We talked about demand, we talked about supply, and now from India point of view, can India position itself as a global hub for downstream industry for copper, especially manufacturing of wires, tubes, and components, rather than just being a consumption center?
Good question, Arvindo. I think for a very long time, India has been consumption-driven economy, we have the technology, we have the resources, we have everything required to become an international hub for manufacturing value-added products made out of copper. What has been keeping us behind? We've always been a high-cost economy. So if you look at the domestic prices of copper, they are much higher than international prices for whatever, many, many reasons, including customs duty, which is there on copper. Of late, in the last 2 to 3 years, our domestic prices have all come at par with international prices. So now we can compete as equals throughout the world. Still, our economy is growing so fast that most of the manufacturers find it much more valuable to just concentrate on the local market. But with the lowering down of the duties, with ensuring that copper is available at exactly the same price as international material, lot more and more players are going outside India. So, for example, if you look at transformer windings or if you look at bus bars, now India is becoming a leader player all over the world. I feel that slowly over a few years, we can also do it in copper wires and copper pipes. Copper pipes, huge capacity is coming up in India. And maybe in 3 years down the line, we can see that we will become a very competitive hub to export copper.
To export copper.
Yeah, that's what.
I'm
We are
sure.
talking about copper
Yeah.
semis.
Yeah,
When I say copper, I mean copper semis.
That's pretty ambitious that if you could ever do that exports of copper, it's going
We
to be.
do have the technology, we have the capacity, and we are competitive in terms of the conversion cost. It is just that our basic cost of copper in India was higher so far, and therefore we are not competitive.
So now we are at parity.
Now we are getting close to parity,
Close to
still not there.
Okay.
As soon as we get to parity, I think we'll be able to export much faster.
Thank you very much, sir. Thank you. That's quite an insight for me as well. So I have a question to Sandeep, sir. We spoke about primary lead, we spoke about secondary lead, and we also spoke about lead secondary industry growing and supporting in terms of total consumptions. The question to you is slightly different on the lithium ion side. So my question to you is that if at all lithium ion side of the industry is going to grow, the industry is going to evolve, how is the reaction to the lead industry going to be? Can I say that is a straightaway substitute, or what's your thought on that?
So I think firstly, yeah, this is a question that keeps coming up whenever people talk about lead acid battery, what's going to happen with lithium coming in. See, definitely there's going to be some impact, but it's going to be different across sectors and different in different ways, different across geographies as well. Now, if you look at it from the Indian perspective, I think lead is still going to be the dominant chemistry at play for a long time, because even though lithium might be, if you look at the levelized cost of energy, might be superior in some ways, India is a very cost-sensitive market. So people look at the initial cost, and that is where obviously lead still has an advantage. The second thing is the recyclability. Now, obviously, lead is recyclable, and there are lead recycling, smelters and refiners all across the country. Whereas with lithium, the technology is a lot more complex, and it will take time to actually get there in terms of achieving those efficiencies, having the recycling infrastructure in place. So, as far as the adoption of lithium is concerned, we see, in the four-wheeler space, there was some transition happening, but it's obviously now not happening as quickly. And a lot of car makers, Mahindra, Tatas, etc., they are now developing platforms that are flexible, so they can manufacture not just ICE, but also EVs, hybrids, flex fuel, because they realize that the transition to EV is not going to happen as fast. I think the adoption is happening much faster in two-wheelers and three-wheelers, but I think in a lot of other places, such as batteries for storage, energy applications, grid storage, backup, home storage, four-wheelers, the demand continues to grow, and lead will continue to be there. And I think one point I'd like to make here is that, the demand for batteries itself is going to grow exponentially. If you look at the mandate by the government, all renewable energy projects that are being set up, they now need to have 4 hours of power backup. So any renewable energy project for solar, wind, they need power backup of 4 hours. That is going to lead to an exponential growth in the demand for batteries. And lead will still have a big pie of that. So that demand and application will be there for lead.
Thank you. Thank you for clarity. I think I also got more clarity on the lithium side, and you continues to see that lead demand continues to be there. Thank you. Chi, I have a straight question to you. Given the time constraint, maybe I'll ask one question to you, and then for everyone, one question of your own choice. I mean, you've been into the aluminum industry and tracking for so many years. My straightaway question is that, how are you looking at the primary aluminum industry or primary aluminum per se in rest of 2025? I'm asking your view to you only for next 5-6 months. If at all your organization permits you to talk about a view, you can give us a thought on aluminum, how it looks like.
I think in the short term, things are probably going to be quite range-bound. I think signal is quite mixed from all sides. Of course, we got a tariff. We got demand is relatively weak, particularly if you look. I think if looking at sort of like construction infrastructures and so on, is relatively weak. But then at the same time, supply is also quite tight. So I think in the short term, things are probably going to be quite range-bound, sort of around the same level that we are seeing now. But then looking forward, probably like 2026, I think personally, I am actually quite optimistic about the aluminium prices. And of course, in the long term, in the even longer term, I think, as I said in there, you know, as I start my presentation, is I don't think I have to repeat that, you know, aluminium has a future. There is a really bullish future for aluminium. We're looking at supply is tight, and of course, it's one of the things that is energy transition. So that's, I think, in the short terms, you know, sum it up in the short term, it's going to be range bound. But then I think it's, you know, going into 2026 when things start easing out, economy start rebounding, we're probably going to see more demand from the construction side, infrastructure side, and that's going to help.
All right. I hope you got a perspective on aluminum, how the rest of 2025 looks like. I think I'll second that thought from you. And thank you, Dijay. I'll have a question to Mr. Dhavalji. Your last question, basically, given the time constraint. You spoke about exports. You spoke about export barriers also. And the question is around that. There are a lot of tightening norms coming in from the exporting countries. And are we really going to have an impact as India as a country in terms of scrap supply?
Well, I think we just have to face the reality of what's going on around the world. And as I said, that slowly, gradually make ourselves, I would say, less dependent on imports. And I think the only answer to that is to try and see domestically of what is available and how we can sort of enhance those supplies into our supply chain. Primarily, I think this was no big secret in terms of whatever these current developments are. I think the one good thing about India is that the economy is growing at about 6.5%. There is this inherent movement or a churn that's happening as far as domestic demand is concerned. So I think by end of the day, if you see the Western countries, the consumption power led to the better generation of scrap. I think slowly, gradually, I think India will also follow that. But there is a time gap, and until then, I think we have to face a bit of hardship, I would say. I think in the aluminium space, I could say that, you know, one is about the scrap availability, but you see there's a lot of integration that's happening where primary and secondary are trying to meet a point of convergence. I think there are 3 primary smelters who've got into the secondary space because I think the ambition or the you know, to attain more sustainability and to sort of, you know, with their decarbonization drive. So I think it's only going to precipitate from that point, you know, and I think likewise in copper also new investments are coming up. I think, you know, I wish there was an easy answer to that or wish India had some easy solutions. All I'm saying is that in terms of when you visualize your businesses until for the next 4-5 years, let's accept that there will be a kind of a shortage or a sort of a squeeze in terms of scrap supplies or availabilities. I think it will be survival of the fittest, I guess. That's what it is. So just be on the top of your game. Try to sort of, you know, be as competitive, as smart and as agile in terms of your sourcing. But that's what the answer would be for India, you know, I mean.
I understand that remains a question mark how it's going to take place. But anyway, thanks for clarity. One last question to you and then probably to them as well. I'm sure being a importer, producer, consumer, and as a corporate, Indian corporate, my question is related to the risk management side. On to you, if at all one as a corporate is hedging its physical business risk, and what are the best practices as part of corporate hedging strategies one can use by using various derivatives markets like LME, CME, COMEX, or Shanghai?
Thank you for that question. I think I've been hedging my copper exposure for the last, I think, 17, 18 years now. And I use whatever platform which is available. Started with MCX. I hedge on LME now and CME as well. It depends on your requirement. If you require to hedge it, including the dollar exposure, then MCX looks good. As a short seller, because I'm always long copper in my factory, I prefer to hedge on the exchange which gives me the maximum contango. So if LME is at a bigger contango or MCX is at a bigger contango, I try to switch my positions based on that so that my effective hedging cost comes down to the minimum. As of now, today, MCX seems to be a better option, especially if you have a domestic exposure. If you have a dollar-based exposure, LME can be a good option.
Thank you. I think some of the audience might have understood this. And it is ideal that for a corporate to hedge its exposure. As he mentioned that he is long physical always, so he has to hedge. And it was very deliberately asked question is because some of the participants who want to experience how hedging works is something that to be looked at, and the best thing is to get an answer from somebody who's already using that. Thank you, sir. Thanks. One question, last question to Samir, sir. To you, my last question. Say something about the unorganized market sector of lead in India and how are they actually playing the role? Because when we talk about secondary market, I'm sure unorganized market also plays an important role. I want to hear from you a few minutes or maybe a few words about the unorganized sector of lead in India.
Yeah, so I
Your
think
thoughts?
the unorganized sector in India is probably as big, if not bigger than the organized sector. So, it's a parallel economy by itself, the unorganized sector of lead, unorganized sector of battery manufacturing. And I think the new rules that have been instituted by the government, the BWMRU rules, battery waste management rules, battery handling and management rules are very important. And I think this is sort of streamlining people to move towards the organized sector. EPR credits can be given by battery manufacturers now. They are mandated to take materials only from the organized sector. And this is a very good thing. So, but I think more can be done. Some of the measures I feel that the government must take is by cutting out the GST on scrap, which is at 18%. You bring it down to 5%, you automatically sort of reduce the scope or incentive to go to the informal sector. A carrot and stick approach where you probably give some incentive to the informal sector to move to the formal sector by giving some sort of a subsidy in terms of capital expenditure towards pollution control equipment, having a single window mechanism to streamline processes to ensure easier compliance. And, import license is given to people to import scrap. So, as long as you're complying and you have your infrastructure and facilities in place, probably the government can give more of an import quota to import more quantity. That could be another incentive to sort of help people move away.
Thank you for this, for the clarity. My last question for this session, and the question is to Tran. I'm going to ask a straight question. I'll read this question to you so that there is no confusion. We spoke about Vietnam. What is the role of foreign invested enterprises in shaping demand pattern for non-ferrous metals in Vietnam? Would you be able to answer this question?
Sorry, the voice is.
Oh.
Is it FDA for the investment? You mean?
Foreign investments. You mentioned something about FDI, so therefore I pitched this question to you again. So I wanted to hear something on on the foreign investment flows.
Yes.
Yeah.
Thanks for question. Yes, FDI play a role. They play a very important role on the recycling and metal demand. They give us the investment on this, and because of their investment, you can see more than 500 industrial zones, and maybe is 70% is the FDI. And the investment on diversify industry who have an inquiry and raise the inquiry of copper and aluminum, antimony, and also lead increase a lot. Because of their investment and with the technology, good technology, and good mindset, our local company also learn a lot from that. So I think they play very, very good role on making the development on mechanism, on high technology, on renewable electric, many solar, many wind is offer energy, for green energy. And they also invest, because with the strong financing, they invest very strong, and they follow the global recycling standard. So I think that is very important.
Yeah.
Thank you.
Thank you, thank you. With this, we'll end our panel discussion. And just to summarize that, we spoke about non-ferrous metals, various commodities, copper, lead, zinc, aluminium, and the experts have given their thoughts on the market. And Mr. Dhavalji also talked about how the recycling industry is growth. And Ms. Tran also talked about Vietnam and its industry growth. Thank you very much for everyone being here in the program. And just to felicitate, I would like to call Sanjay sir. Please do come, and we'll do the felicitation for one of you. Wait, yeah, sir. Yeah, I would like to call Ehsanji, please come. I'd like to call Amar Singh also, please do come.
So with this, we are ending today's sessions. Our networking dinner will start at 7:30 p.m. I request everyone to be here around that time.
Nice meeting you.
Everyone wakes up to a world that keeps turning, forging ahead. The world can't stop, so neither can we. Because we create that one metal that represents progress and sustainability. We make stainless steel. For the last 45 years, this has been our only passion. We are Laxcon, India's leading integrated stainless steel producer.